Welcome to the Growth, Grace, and Prosperity Podcast. Join Stewart Heath for down-to-earth conversations with top professionals, entrepreneurs, and leaders who have a story to tell. Let's get rolling.
Hello, everyone. Welcome back for another episode of the Growth, Grace, and Prosperity Podcast. I am your host, Stewart Heath. I'm the founder and CEO of Harvard Grace Capital. Very excited to have today Miss Belinda Arender, if I'm pronouncing that correctly, as our guest. She has been in banking and in the mortgage business for, I won't say how long, but she's got a lot of experience, I'll say that. She can tell us all about that. So, Belinda, thank you for joining us today.
Thank you for inviting me.
Yes, ma'am. So, let's jump right in. When you think back over your career, is there a point in time which you would call, which you said was a game changer, or from the time you were 5, did you always want to be a mortgage lender, or tell us what put you on this path versus something else that you thought you might want to do?
Yeah, so I'll tell you, no one ever goes as a mortgage lender for Halloween. So, when you're going around in the classroom in 5th, 6th grade and they say, "What do you want to be when you grow up?" No one ever says a mortgage lender, correct?
I don't say that for CPAs either. So,
that's never on the list. So my pathway is a little bit different. So between junior and senior college, I got married. And right after I got married, we found out we were going to have a baby. So I stayed because of insurance and stayed at the bank. Ended up going back to night school, finishing my degree later. But about a year and a half in, the mortgage originator went out on maternity leave. The bank president came over. I was the drive-through teller. The bank president came over and said, "You're now going to go do mortgages at the County Line Road branch." And I'm like, okay. My husband and I lived in a single wide trailer, knew nothing about mortgages, but he said I was going to do it. It was a promotion and I was super excited. So I head over, and about 3 weeks in, he comes in and he goes in that gruff voice. He goes, "Belinda." And I'm like, "I'm back here." And he comes back and he throws my business card across the desk. He goes, "What's wrong with this business card?" And I'm like, "I don't know. You said I could be a mortgage loan originator." He goes, "Belinda, mortgage has a T in it. Mortgage has a T." So literally didn't even know how to spell it. And from there, it became a fantastic career that I absolutely love. I've done it for 32 years. I know, thank you for not saying that. It's fun now. I now say in decades. I've done it for 3 decades. That sounds a little bit less aging than 32 years, but either way.
I'm approaching the end of my 4th decade in business. So,
So you understand. So 4 decades sounds better, right?
And I just feel like I'm just finally getting good at it. So
that's how I got started in the business, quite by mistake. It was, I wanted to be an attorney. I was going back to school to be an attorney, and here we are.
Well, you're far too happy of a person to be an attorney. So,
I don't know.
Clear.
We'll see.
Yeah. Well, your LinkedIn profile is like a who's who of all the best in, banking institutions from Middle Tennessee and whatnot. So, you've been with some of the best, and now you're with it looks like a mortgage company.
It's a bank.
Independent originator.
Yeah,
Pardon?
it's a bank. It's a bank.
Is it?
It is. It's a bank. So I grew up, my mom was the compliance officer for our local bank down in South Mississippi. And of course I was like, I'll never work for a bank. And I've only worked for, other than when I was the birthday girl at McDonald's in high school, I've only worked for banks ever.
So, okay, I'm not familiar with that. Primus, is it?
Primus, yes. We're
Primus.
based out of Virginia. So
Okay.
it's a bank based in Virginia.
Okay, and is this a mortgage origination office in Tennessee, or are they actually doing banking in Tennessee now?
No, we're a loan production office, mortgages.
Gotcha. Okay. All right. Well, I try to keep up on all that stuff, but I think banking's a good career. It's literally where the money is. So,
There's that.
Okay. So similar to the game-changing question, perhaps a little on the dark side. Yeah, I like to ask people about bumps that they've hit in the road. They might be business bumps, they might be personal bumps, and maybe they didn't change your path, but it was a hurdle, a challenge you had to navigate and get through. Can you tell us about one of those and how you were able to manage through it?
Sure. Well, I mean, apart from surviving 2008, which was horrible for the real estate industry, I've seen a lot of changes.
What happened to them? I'm teasing.
Well, I've seen a lot of changes. Probably one of the largest changes I've faced in my career is in 2003, I was offered to come to Nashville to open the mortgage division for the bank that I was working for at that time. My husband and I had always said if we ever had the chance to raise our children somewhere else, we wanted to do that. So we were in Mississippi. Nashville looked great. We took it sight unseen and moved to Nashville. Now, keep in mind that previous year I'd been the #1 lender in the state for mortgages for Mississippi. So just had a huge following there. I mean, my son used to say, I don't want to go to the store with you. You know everybody. It's because I'd done their mortgage, right? So when we came up here, that was different. Definitely a challenge. I had to start my business back over. You don't walk in with a group of business customers when you change states like that. So that was a challenge, having to build that book of business again. We had a 5-year plan. This is our 5-year plan. In 5 years, we wanted to be back where I was when I left Mississippi. It took about 2.5. So by year 3, I was actually ahead of on my numbers. That was really great. Also life-changing at that time. We opted to let my husband become a stay-at-home dad simply because the whole reason we wanted to move was to give our children additional opportunities. And if we were both working jobs that, especially mortgages that require more than 40 hours a week, then we were going to miss that reason that we moved up here. So we figured out then a way to live on one income. He would become the stay-at-home dad that would take them to football and baseball and everything that there are boys. So everything that boys do when they're younger. And that was something that was really different, especially, that was hard for the families. They didn't understand why he was staying at home and not working. And I'm like, well, because this is what we're choosing to do with our life. Right. It actually turned out to be a really big blessing. I think that, a lot of times life sets you up for what's coming next. Later, he would have cancer. And actually still does. But that was something that I think had we been dependent on 2 incomes would have been far worse than what it was since we weren't dependent on that additional income. So I think that that's something that even though it was not a good event, it was something that validated what we had done earlier in our lives.
Again, looking at LinkedIn, it looks like you actually changed companies in 2008, the fall of 2008, when things got so many mortgage people got laid off. But it looked like you made a move and didn't miss a beat. I mean, you brought up 2008. Was what brought about that move, and did it have anything to do with
Absolutely,
the great financial crisis? Yeah.
The bank that I was working for at that time opted to close their mortgage division. And so I had my branch that, again, you don't take your employees to raise, but you do take your employees as family quite often. So I had a branch of employees that we had to figure out where we were going to go. We had to find that next step because they called and literally gave us less than a 30-day notice that they were closing. So we actually went and brought a new bank into town, brought it to market. Very similar to how when I originally came in 2003 and brought that company to market, we brought that bank to market. We're there 5 years. That bank had a great mortgage division, ended up making a change. And long story short, the bank that I changed to, I was there short term because ended up not being a good fit. The bank I went to after that ended up merging back with this first company that in 2008 closed their mortgage division. So altogether, I ended up with 15 years at the same bank, just under a different name.
Interesting.
It's a very small world. Okay.
It is. Yeah. And all the bankers know each other, and they just sort of, it's like musical chairs. Every few years, have to pick up and change business cards. So
Yeah, always be kind to those people that are your competition, for tomorrow they could be your employer.
right, well, or at least just a colleague for sure.
Exactly.
Yeah, it's a good rule to live by anyway. So, Belinda, as we're recording this episode, it's March 7th. The financial markets are anything but stable at the moment. Interest rates have done a yo-yo this week. At least the 10-year bond has, and that brings to mind. I mean, what do you do as a leader of your business unit to stay current on the things that you need to know, both on short-term and long-term basis? I love to pick people's brains about, are you a podcast person? Are you a book person? Do you miss the ink from the newspapers that we all used to read, being on your fingers, or are you watching CNBC and stuff like that, which is always on in my office? Sound's not up, but it's always there. What do you do to stay current and stay on top of your game?
So there's a couple of things. First and foremost, our secondary department is ran by a nationally recognized and respected industry leader. So every single morning he sends his commentary on what happened yesterday, what he expects to happen today. If there's any new economical factors that came out, like jobs came out today, he actually is going in there and saying, here's what came out, here's what they expected, here's what they came out at, here's what you're going to see as the impact. So he's incredibly knowledgeable, and he shares that knowledge with us. And I absolutely love that, because I've been here 3 years and I've learned more about the economy and how it affects mortgages than I did in the other 29 years, because he is so good at giving and giving us that information that helps us know what we expect is going to happen. Now, it's hard to know exactly what's going to happen because the market has been all over the place. Used to, you could project, if gas prices were going up, mortgage rates were going up. Now it's just kind of all over the place.
Yeah, and you never know who's going to say what on X or whatever.
Well, and that's one of those things that, absolutely great point. I'll come back to my other ways that I keep current. But if you watch the Fed has their meeting. Everything is great. We're good. And then the notes come out where Jerome spoke, and then what he says, the market just goes a whole haywire because it doesn't like what he said.
Right.
Or maybe it liked what he says and it goes the good way. But again, it's not always actions that is driving. It could be verbiage that's driving. I also subscribed to several of online systems that help me keep up as well.
You want to name any of those?
I use Mortgage News Daily, so that's one that I watch a lot. I get Scotsman's Guide. I get it every morning. It's always got really timely articles in there that I'm following. Absolutely.
Okay. Well, let's pivot to personal wealth for a minute. We like to have successful business leaders here, and many of them are entrepreneurs, and you're sort of an entrepreneur within the whole bank. You're running your own business. And with that comes the prosperity part of our podcast. And again, we're not asking for dollar amounts or account numbers or anything like that. We do want to find out, because a lot of business people like to develop multiple streams of income or just invest in other things. What do you do with your personal investable cash?
Well, I have teenagers. No, I'm kidding. We actually like real estate. Of course, that's something really easy that I like to invest in things I understand, and I understand real estate. So we have real estate. We buy and sell. We have investment properties. So there's a couple of ways that we do it that way. Our primary home is a big investment for us. So certain ways that we'll do it that way. We also obviously invest in the market. I do have a financial planner that I trust with my life, because I don't know a whole lot about the financial markets from that perspective, but he does. I always tell people, you need a subject matter expert. You don't go to a heart surgeon to have a cavity removed. I mean, not a dental cavity, at least. You need a subject matter expert in the field that you're wanting to invest in, or in the field that you need help in. So I have an investment guy Anytime the market gets bad and I'm having one of those days and I'm like, hey, what's going on with my investments? He automatically comes back and says, hey, are you retiring today? And I'm like, no. He's like, then it doesn't matter. Like, okay.
Yeah, I may not agree with that point of view, but I do understand where it comes from, and I feel sorry for those guys. Like Monday and Tuesday this week, he probably was inundated with phone calls as the market was yo-yoing and stuff like that. But anyway, well, thank you for that. Let me for clarification. Are y'all fixing and flipping? You know, when you said you had some investment property,
We typically hold it a couple of years.
Hold and
We'll
rent?
we'll typically hold, and some of it's like vacant land. So we will buy a farm, and we don't farm, but we'll hold the land because, maybe it has 150, 200 acres on there. And we know in a couple of years that sometimes they'd even doubles just depending on where it's located.
Oh, fun. I like that.
Yeah. And it gives my husband a place to go when he gets mad at me. He'll just go up there and ride around on it.
Well, that's important too. Yeah.
That's how you stay married those 3 decades again, right?
Yeah, that's killing 2 birds with 1 stone there. So investments and marital bliss.
Exactly.
So, all right, Belinda, here's the last question.
Okay.
If you had one piece of advice for somebody that you're either mentoring or just wanted to follow in your footsteps, what would that one piece of advice be?
I would tell them to take the chance. Always bet on yourself. Every single day, you've got to invest in yourself. You've got to believe in yourself and bet on yourself.
Wow, that's probably the shortest answer we've ever had to that question, but it's to the point. I love it. So, all right. Hey, if anybody watching this wants to get in touch with you, how would they do that?
Sure. The best way is my cell phone, 615-416-4464. They can call or text me. I literally keep it with me all the time. Would love to visit with anyone that may have questions or just want to share some knowledge they need.
Great. Well, we'll make sure that gets in the show notes. Make it easy for people. And thank you again. People at your level don't have a whole lot of time, so we appreciate you sharing yours with us.
Well, I'm glad to be here, and thank you for inviting me.
Thank you for your story, and to the audience, thanks for watching this episode of the Growth, Grace, and Prosperity podcast, and make sure you tune in for the next one. Thanks a lot, y'all.
Thanks for tuning in to the Growth, Grace, and Prosperity podcast. If you'd like to be a guest, visit growthgraceprosperity.com/guest. We'd love to hear your story.